Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape with capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site for Cybersecurity Awareness Month is John Hauser, America's Cyber Due Diligence Leader, EY, and Navroop Mitter, CEO of ArmorText. We're here to discuss the top priority in the national cyber landscape and organizations, how they are preparing to take communications from the offense and defensive side of protecting the brand. It is great to have both of you with us. Welcome to Trade Talks, and certainly to one of our favorite months of coverage, which of course is cybersecurity. John, and when you think about the #1 priority when it comes to the national cyber landscape, what's keeping practitioners up at night?
Yeah, so reducing our vulnerability in critical infrastructure is, I would say, the #1 priority. So these are the services that we depend on for our modern lives. We've seen successful cyber attacks against food distribution networks, against gas pipelines, against, there's even last week there was an intrusion into a water treatment facility. So we know that these threats are real, and what we're seeing is that there's a lot of brittleness in the systems that we depend on. So a cybersecurity attack can have a ripple effect on third parties that goes wider than just the incident itself. And so when we're talking to clients about this all the time, what we're telling them is if you're in critical infrastructure, you need to be keeping track of the latest threats. You need to be able to keep track of the latest regulation, because there's a lot more regulation coming down, and then you need to be prepared to be resilient, which means you need to be able to recover quickly after an incident in order to get those systems back online.
And Navroop, that's a good point that John makes, because the tech stack is so big right now, and of course you have vulnerabilities to the other parties that are engaged, right, within your tech stack. So when you're thinking about navigating technology and cyber risk, it changes the calculus for boards and for executives and the leadership team when they're increasingly being expected, particularly with public companies, to provide this type of cyber insight and oversight.
100%. Look, what we're seeing right now, whether it's domestic or internationally, is that executives and boards are increasingly being asked to provide greater oversight from a cybersecurity perspective, but also in particular greater oversight over your incident response and remediation efforts. Right, so when we think about the US, we're looking at the SEC, but when we think internationally for any of the multinational corporations, right, in the EU, we're also looking at things like the NIS2 directive, right, or DORA. All of these are actually focused on your incident response preparedness efforts for critical infrastructure. They recognize that all these different parts of the economy get impacted. When one company gets hit, there's a ripple impact across everyone else. And so a lot of what is actually taking place right now, the thing that I would think would be keeping executives or boards up at night would be how prepared are they to actually effectively provide that oversight from a cybersecurity as well as an incident response perspective. Have they actually war-gamed that? Have they done tabletop exercises or simulations around that? Because too often, the tabletop exercises that organizations did engage in were actually directed at the technologists or the cybersecurity personnel, right? The nerds in the basement, so to speak. And so as a result, they haven't actually simulated, how their boards are going to react or how the executives are going to react. Who's going to be responsible for both internal and external communications? Who are the different stakeholders that you might have to be engaging with, whether it's a regulator or shareholders, or even your key suppliers and vendors?
Yeah, John, are you finding that more effort is focused on mitigation rather than response? And how are you working with companies or advising them to try to change that calculus in their thinking? Because the response is when things get public, right? And that's kind of when you're deciding, is this an incident or is this labeled as a breach?
Yeah. Well, there's a critical deficiency, I would say, in resiliency readiness out there. There is a lot of focus on the front end of a cybersecurity incident, which is quickly detecting it and containing it. But again, getting those systems back up online and restoring trust with third parties who may have been affected, whether it's individuals whose information may have been lost, third parties whose own systems may have been disrupted. Restoring trust is a big part of the resiliency equation too that we need to see, more focus on.
Right, and of course, you can't escape a conversation without AI being part of it. Yeah. But you have competing business priorities where you have, whether it's product lines, revenue lines, where they want to get these new products out to market, or they want to incorporate AI tools within the enterprise itself. But you have to factor in the risk approach as well.
Absolutely, and so AI is a tool that, like anything else, can be used for good or for ill. So we are seeing the bad guys using AI, like to do convincing impersonations of voices or deep fake, video technology in order to do fraud schemes and fool people into sending payments to places they don't belong to, right? But we're also seeing, from a cybersecurity standpoint, AI being used for good. So it helps network defenders learn faster from their mistakes. It helps them incorporate a larger number of data points into their decision-making process to make better decisions. So that'll be important for companies to be able to harness that and embed that AI into their cybersecurity defense.
Yeah.
You know, when it comes to the AI side, I think one of the things that I'm most concerned about, though, is how things that are being developed ostensibly for the good side of the house are actually going to be misused by the bad side of the house, right? So one key example is in the financial or banking and insurance spaces, we are actively developing AI that's going to better help evaluate the value of different parts of our assets, our IP, right? And those automated approaches to valuation, understanding who they're most important to, what market would be most interested in them, is something that can be leveraged by an attacker, right, to better monetize their efforts. If they're already going to be breaking into your organization, especially if law enforcement has their way and we start to cut off the ability to actually make ransomware payments, they're going to be looking at these situations saying, hey, we now need to innovate and figure out new methods of monetization based on the same attacks.
Right.
Because the attacks aren't going to go away. So they're going to steal the same data, better evaluate it, value it, understand who the right market is for it, and then actually monetize even further.
Yeah, but that also comes to, pre-breach or incident preparedness as well, right? And it's not just simply the directive that you're getting from the board or from senior leadership. I mean, this needs to be across the entire organization where it's part of the ethos and the DNA of the organization to prevent these. I mean, Gen AI, and again, AI is nothing new to any industry for the most part, but what you're putting into these Gen AI platforms and how, what protective measures are around that and coming up with a longer term sustainable solution to prevent, some of the more obvious things. How do you monitor what's going into these chat mechanisms and so forth? So it really, it changes how you're developing your cyber strategy, and it happened quick too.
Absolutely, and so I think you nailed it. I think there's the concept of how can you use AI to protect your network from a cybersecurity standpoint. There's also, how do you responsibly use AI that you're using for other purposes, like commercial purposes for your business, and making sure it's not creating bias or safety risk or other types of risks to society that we want to avoid. So companies who are smart about their governance in cybersecurity can be smart about their governance in AI too, and make sure that they're embedding responsible AI risk mitigation principles into their
And speaking
thinking.
of governance, let's talk about regulation for a moment here, because when you operate across multiple jurisdictions, whether, like in the US, there's 50 different jurisdictions, and of course the EU, there's all their frameworks and standards as well. How challenging is that for companies? Because not only are you thinking about the AI perspective, you have the data privacy perspective, then you have cyber, there's different reporting requirements and so forth, and of course just by the nature of how legislation is formulated, there is no standard cohesive global framework.
Correct, yeah, it's an incredibly, as you know too, it's an incredibly intricate legal framework and complex legal framework out there. So like you said, we're seeing AI being regulated, for example, by municipalities, by states, by the European Union, and they're all slightly different. So there are some common elements that companies can look to within the regulations that unify some of the compliance requirements, but it is a very challenging, complicated, messy compliance environment out there that requires a lot of attention and vigilance and understanding what risk you're walking into.
And I think it's about to get a lot more complicated, right? When we think about NIS2, which goes live later this month, I think we're some 15 days away from it going live. When it does, the different member states of the EU will have actually adopted their own versions that they've adopted into law, right? The directive was written at the EU level, but it's almost like a recommendation set that everyone else has to make more specific or tailor for their own environments and their own nation states, right? And so one of the other risks that's coming down with that is if you're not providing that effective oversight, if you're involved in a breach, there might be long-term career consequences for you if you're an executive who sits on a board of a company that's operating in the EU, right? There are civil and potentially even criminal liabilities that the EU left open for the member states to decide upon.
Okay, so there are criminal elements associated with that as well.
There is a potential for criminal charges. Right. They haven't clarified that it's a mandatory thing, the civil side is, but they left it open to the individual member states of the EU as to whether or not they also wanted to consider criminal charges.
Right, and then every industry has its own set of regulations as well. I mean, look at financial services as an example, or healthcare. I mean, one of the most heavily regulated industries, right? So you have, that set as well that you have to factor into, your plan there. So would you recommend, monitoring user management, policy enforcement more at the company level where you have a strict governance standard set in place to adhere to these policies as best as you can?
So I think in a lot of cases, organizations actually have a number of governance-related policies, right, around user management, policy enforcement, how do we govern the use of identity, how do we actually do authentication and authorization. What we oftentimes see, though, is that there's a significant amount of shadow IT in environments. A recent example is actually the use of Signal and WhatsApp, for which a lot of the banks suffered under tremendous amounts of fines, right? There were some 22 banks that were initially hit with about 2.6 billion in fines. That number's now risen past 3 billion total. And the enforcement action up until now was actually about whether or not they could provide their required retained business records, right, under either SEC or CFTC requirements. Now you've got the FTC chiming in where there's a case ongoing where there's a requirement for preservation of documents. That was violated by use of Signal or one of the other ephemeral messaging applications. You're seeing a lot of enforcement action around that, and that's because folks weren't really applying their own governance policies. Had they been, they would have been saying, oh, wait a minute, we actually can't use this tool to begin with. Yeah. Now, I think in the future, the interesting thing is that's what's happening right now, and we just finished authoring a paper on this with a former AUSA, is that the enforcement action to date has been around retention, but future enforcement action very well could include from the DOJ, SEC, CFTC, FTC, all the way down, categories like user management and policy enforcement, all the other areas that are also not available to you to manage or govern when you're using consumer-oriented technologies in the enterprise. Yeah. And that's a pretty significant risk.
Yeah, well, it's certainly, I'm sorry, go ahead.
No, yeah, what you said about criminal is really interesting, potential criminal penalties. I think what you see is that most of these requirements are civil in nature, meaning the potential penalties are monetary or maybe like a court order against a company, which runs afoul of the regulations, but then companies can wander into criminal exposure if they're not transparent, if they're using fraud or deception to to fool the regulator or to fool the investing public about what's going on inside their companies. And so that's where it becomes very dangerous, for companies if they're not super mindful about what they're disclosing to who in an accurate way.
And for executives, I think the potential consequences can be even more personal, right? So in the case of some of these fines levied against the banks, one of the things the DOJ recommended was clawback provisions. They wanted to pull the money back from the people from their bonuses.
Right.
You also have potential consequences in the EU of no longer being able to serve on a board in the future if you were there when an incident took place and the oversight was found to be lacking.
Right.
And so that could have long-term career consequences.
What about in terms of protecting the brand and effectively communicating to your investors, to your clients, should an incident or a breach take place, reassuring them that the incident is being managed properly, and then we have other standards in place to help prevent this going forward? I mean, that can't be an easy conversation to have.
Yeah, so I think the sort of straightforward efforts that companies make to protect the brand or to prevent the incidents from happening in the first place, and then to use all the incident response tools that you were talking about to quickly contain it and spread and mitigate the damage. But the communication strategy and the rebuilding of the trust is a critical part of that too. Companies that under-disclose what's happening in terms of their incidents. In other words, they're making it sound better than it really is. They can run into huge trouble with regaining trust from their consumers and other trusted third parties, with regulators. Companies that over-disclose can cause unnecessary panic and loss in value. So walking that tightrope of the communication strategy is every bit as important to brand protection as the more obvious sort of prevention and mitigation cybersecurity,
Yeah, and especially when you're trying to wrap your head around, how do you quantify this? Like, what is the dollar amount that's associated with brand? I mean, it's intangible at the end of the day. I mean, it's obvious if you have a business line that's down for a week or two, that's going to impact earnings and so forth. But, to put a number on that is very subjective, I guess.
Yeah, there's valuation folks. I've met some of them at EY who that's their job is to put a number on that. What's the goodwill of the company worth? Because somebody's got to pay a certain amount of money for a company, and so they actually value that. And of course, cybersecurity reputation and prior incidents and loss of trust in the market and things like that have an impact on that.
Okay.
I was going to say, I think this is why we're about to see a significant shift in the investment focus from pre-breach readiness to post-breach response remediation efforts, right? For so long, the majority of our investments have been in better walls around our castles, right? We've got the best firewalls, we've got the best scanning technologies, we've got the best threat intelligence sharing technologies. We did a lot of exercises to ensure that we could keep the adversary at bay, but we never accounted for once the adversary actually makes it over the walls, right? They came through it, under it, over it, either way, they're on the inside now. Now how do you operate? And that post-breach readiness is an area where I think executives have long felt that, hey, this is just something the technologists will go deal with, right? And I think there's a telling stat in IBM's cost of a data breach study from 2024. In the wake of a cyber incident, when organizations increase their investments, 55% of them will actually choose to increase their investments specifically in incident response planning and testing efforts. And that's presumably because they weren't happy with how they just dealt with the last breach. And so much of what you were talking about there is actually around whether or not you can actually meet the different shot clock requirements that you're suddenly up against. You've got a shot clock from your regulator. You've got a shot clock from contractual obligations that were inserted by key vendors or suppliers or folks to whom you actually are responsible. And if you can't communicate, you can't remediate. And too often what's overlooked again
Shot clock gets shorter and shorter.
Exactly.
Yes.
36 hours now in some cases, right? Instead of the 2 or 3 days.
Right.
If your stakeholders internally can't figure out how they're going to communicate to coordinate that response, you have no hopes of meeting that shot clock. And with IDPs regularly being compromised, your identity provider gets compromised, the attacker now is able to either A, deny you access to your email, your chat, your video teleconferencing solutions, or is suddenly able to provision their own access in so they can follow your remediation efforts to stay a step ahead. If you don't have an out-of-band strategy with which to, that kind of helps you communicate post-breach, you're not going to be able to meet any of those shot clock requirements.
Yeah, which I think is a really interesting conversation because, to kick it off, we were talking about it flippantly, like in nerds in the basement and so forth, managing this. Think about how the role of the CISO has emerged, right? I mean, completely evolved. Look at the composure of boards. You have more cybersecurity experts that are on the board because you have to be able to effectively communicate with everyone, fighting for that capital to invest in the tech stack and elsewhere, being able to communicate this in a way to the board and to senior leadership to get these resources, because again, it's an intangible dollar amount when it comes to brand identity and being able to protect the brand.
Yeah, the role, as you said, the role of the CISO has changed dramatically. I think companies are moving the CISO closer and closer to senior management and to boards so that there's more direct conversation and fewer, other executives in the reporting line so that they can have better conversations and be more informed. CISOs not only have to understand regulations, technology, and also how to explain all these concepts to people who aren't familiar with them so that the value of the investments in cybersecurity comes across. That's one of the things you see all the time with boards where they're willing to invest in cybersecurity, but they don't understand what they're getting for their money. And so the CISO plays a pivotal role.
Yeah, it certainly does. I mean, many times you see CISOs reporting up through the CFO function for that reason because they're tying together risk mitigation across the entire enterprise and having that bird's eye view, which is a little bit off topic, but why you don't want to operate in those silos for that reason, so that you're able to be able to assess that at all times. It really is evolving quickly.
But here, I think the interesting thing is, while the CFO is oftentimes where that CISO reported up in the past, or to whom they passed messages that would then be conveyed to the board, I actually think the general counsel or the CLO might start to be one of the CISO's best allies. And the reason is because when you're up against this patchwork of regulations, whether it's the 50-state problem or now the entire EU or some combination of thereof, the general counsel who's sitting in on these tabletop exercises is often the one who's asking the right, smart, sometimes unintended questions during them as to, wait, how are we actually going to meet that records retention obligation under these conditions? Where is this audit trail of who said what and to whom, how it was said and how it was consumed going to come from if I need to go to court later on? When the GC is asking the right questions and then not getting back the right responses because they now understand the problem, the pressure that they can apply to the board and the direction that they can provide is sometimes greater than even what the CFO can do. The CFO will often just balance it as a risk calculation. Well, we can absorb this much of a financial hit, and they're going, I'm not absorbing that regulatory hit. This is a bigger issue for us. This could literally impact our ability to move forward.
I agree 100%. And not only regulatory requirements, but contractual requirements. You're seeing more and more contractual requirements, cybersecurity contractual requirements being embedded into contracts between companies saying you need to tell us, you need to comply with these regulations as a contractual matter. You need to tell us about incidents within a certain amount of time. So the risk, the legal risk is is much higher than it was 5 years ago or 10 years ago for companies across the board.
And oftentimes that gives them a broader perspective than almost anyone else in the environment, but they need to be educated themselves. So that kind of preparedness we were talking about the rest of the executives, HR, legal, finance, the rest of that C-suite and board all need to now be a part of those tabletop exercises. And they need to be run in a manner that actually helps them simulate their roles and responsibilities in a post-breach landscape, rather than just the roles of the technologists and the nerds in the basement.
All right, appreciate both of your insights. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.